Street retail in Portugal is emerging as one of the most resilient and strategically relevant segments of commercial real estate in southern Europe. With increasing investor interest and consistent performance, it's becoming a focal point for capital allocation. In this video, we outline what makes Portuguese street retail distinct, how the market is performing, and why it's gaining traction with both domestic and international investors. Street retail refers to ground-floor retail units directly accessible from the street. These are typically located in dense urban zones, embedded within mixed-use buildings. Unlike retail parks or shopping centers, these units integrate into daily life, supporting cafes, fashion outlets, service providers, and neighborhood-focused brands. Their visibility, walkability, and versatility make them structurally different and often more defensible than suburban formats. The fundamentals are strong. Retail investment in Portugal reached €1.1 billion in 2024, with a growing share flowing into street-level units, especially in Lisbon and Porto. These assets offer long-term income stability, low vacancy rates, and rental yields between 4.5% and 6.5%, depending on location. Several drivers are behind the trend: a post-pandemic shift toward local, experiential shopping, a rebound in tourism, increased investor demand for tangible, inflation-protected income, and growing alignment with urban regeneration strategies. Street retail also benefits from inflation-indexed leases and a diverse tenant base, from global brands to local food operators. Lisbon remains Portugal's most mature retail market. Prime streets like Avenida delivered C rents of up to €140 per square meter per month, with yields in the 4.5% to 5.0% range. Occupancy rates on core streets exceed 90%. Porto is maturing quickly. Rua de Santa Catarina and the Olhados district are attracting international brands and lifestyle operators. Prime rents range between €55 and €80 per square meter, with slightly higher yields. Secondary cities like Braga and Faro are gaining attention for their affordability and upside. Yields here can exceed 6%, though vacancy and transaction volumes remain higher and lower, respectively. Post-COVID consumer behavior has shifted. 68% of Portuguese urban consumers now prefer to shop within walking distance of home. This is influencing demand for flexible, street-level spaces in residential neighborhoods and lifestyle districts. New tenant categories are driving growth: cafes and specialty food, wellness and boutique fitness. Hybrid retail formats like co-working and community stores, and experience-driven concepts that require adaptable space. In 2023, over 40% of new leases in Lisbon were signed by non-traditional retail operators. This tenant evolution is supporting stable, inflation-resistant rental flows. Portugal welcomed over 31 million tourists in 2024. Lisbon and Porto's high street zones benefit directly, with tourism accounting for up to 40% of city centre retail spending. Tourism not only boosts footfall, but also supports premium rents and long-term demand. This reinforces street retail's appeal in high-exposure areas, particularly those well integrated with transit and hotels. Despite strong fundamentals, street retail in Portugal carries certain risks. E-commerce continues to pressure traditional retail categories, though experiential and service-based tenants are helping shift the mix. In historic districts, strict zoning and preservation rules can limit renovations or usage changes, affecting repositioning strategies. Tourism-dependent areas also bring some volatility, especially during periods of travel disruption. Rising financing costs are another consideration. With prime lending rates above 4%, high leverage acquisitions and refurbishments are under more pressure. Success in this segment depends on disciplined asset selection, understanding of local regulations, and careful financial structuring. Investor strategy in Portugal's street retail market is increasingly focused on walkable, high-footfall districts with strong local and tourist demand. Lisbon remains the most liquid and established, while Porto offers lower entry costs and growing upside. Emerging cities present value-add potential, particularly where retail corridors are underpriced but benefit from improving infrastructure and demographics. Tenant stability is now a key performance driver. Operators with strong cash flow and experiential offerings are preferred. At the same time, ESG compliance and design adaptability are becoming essential to long-term asset positioning. Success will depend on precise location selection, tenant alignment, and disciplined asset management. Street retail in Portugal combines high visibility, steady returns, and adaptability to shifting consumer behavior. It is outperforming traditional formats in resilience and relevance. With strong yields, consistent occupancy, and alignment with long-term urban planning, the segment offers clear strategic value. For institutional and private investors alike, street retail in Portugal stands out as a compelling commercial real estate opportunity. For investors seeking targeted exposure to Portugal's high street retail market, Roca Estate provides access to pre-vetted, income-generating assets. We specialize in commercial retail investments with 5 to 6% net yields, backed by local due diligence and tailored acquisition strategies. Whether you're focused on income stability, capital growth, or portfolio diversification, our team supports you from sourcing to asset management. Contact Roca Estate to schedule a private consultation or request a curated investment brief.